Hi everyone, it's Monday, start of a new week. It's the 5th of the 5th, 25. I love those sort of numbers. So it's 5 of May 2025. So 5/5/2025. Make of that as you will. It's been a holiday in China, in Japan, South Korea as well has been on holiday today. So little liquidity in the Asian session reduced quite significantly. And then Europe, the UK is on, it's a bank holiday today. It's the early spring bank holiday in the UK. So the city is closed down today. There's big celebrations for the 80th anniversary of Victory in Europe, VE Day, which takes place on Thursday. They've started a 4-day celebration here in the UK, and lots of other European countries doing a similar thing. Obviously, the Russians will go mental the following day on the Friday as well. So 4-day truce as well he's talking about, isn't he, old Mr. Putin against Ukraine? But there's no sign of that particularly. But anyway, services PMI data. Remember the manufacturing PMI data last week was a tad better than expected, but still remained in contraction mode for the United States. This afternoon, it's expected on the next 15 minutes or so, it's expected to hold up. Now you can see this number here. You can see that number there. Let me actually make me hold up at the in the sort of expansion mode at 50.2, but coming down significantly from 50.8 last time. And then last time that was a significant decline. If you can see this chart here from the Forex Factory, you can see last time it was expected to come in around 52.4. So it's been pretty good for these first couple of months of 2025. We had that spike to the upside here at, in November 2024, just after the election, or ahead of the actually, it was ahead of the election, wasn't it? I think when it came out. Yeah, so services key. Remember, key services sector. It's everything from doctors to bankers to accountants to lawyers and all the rest of it. Everybody who provides a service, doesn't actually produce anything tangible, but produces a service and advice. So financial advisors, insurance companies, all that sort of thing gets captured in services. So for the highly industrialized countries, the services sector is very, very significant. 85-88% of GDP of a country's economy typically. So to have that sector just about expanding is not great news, is it? You want it to be at 55 plus, really 56, 57. As you can see here, it's been much healthier. We had this big bounce back towards the end of 2021 where we went up even to 70. We had a roaring comeback from the close down of the COVID period. So it's been pretty tacky and weak for 2025, with obviously the massive emphasis that the media and everybody else and the new administration in the US has put on this tariff talk, trying to level the playing field as they would see it. But it's just creating an awful lot of friction in global trade and creating a lot of political headache for many, many people around the world. And see how if President Trump has called this correctly as far as the US economy is concerned. Over the weekend, we had some significant news. We had Warren Buffett, hero of many, the key of long value investing, announcing he's standing down, CEO and chair of Berkshire Hathaway, his massive conglomerate that he's chaired. I think is it 50 years or 60 years? It's an awful long time. Shares there are down 3.6% in the opening half an hour of US trading, or the opening 20 minutes of US trading. Netflix is also off. I know many of you hold Netflix shares are off over 3% as well. That was on in reflection to again, President Trump over the weekend announcing 100%. He likes these round numbers, doesn't he? 100% tariff, doubling the cost of imports of foreign films. So foreign films are going to be tariffed at 100% in the United States, helping, as he calls it, ailing Hollywood. Here's a quick picture of Hollywood. Here's the Hollywood sign for you, if you like. There we are. There's a Hollywood sign for your Monday. There we are. So Hollywood's ailing. These letters are much bigger than you think they are. Well, I remember there was a quiz. Somebody was saying how tall they were. I can't remember exactly, but in feet they're actually much bigger. I think a human comes up to about here. So anyway, 30 odd feet. But anyway, Hollywood is ailing according to the president. So he's going to tariff foreign films into the United States at 100%. We don't have to get rid of that. That's enough of that. frivolity, isn't it? So services PMIs, that's the key data. 7 minutes. You can see here the countdown on the Forex factory signal. For some reason, the final reading hasn't come in. Let's just try and update that. See if that's come in. Yeah, 50.8. So again, it's weaker than expected. 50.8. The less significant final reading of PMI. It's the ISM, the Institute of Service Management. That's why it's key in 7 minutes time. So this morning we've had a weaker dollar generally, and stocks are down. Gold's up. Bitcoin's come back down again. We'll run through all of those before and after the data's come out. We'll see if there's any. I'll just get rid of that Hollywood sign. It's not hanging around. What else happened over the weekend? Oh yes, there was a big landslide for the incumbent Labour Party in Australia. So the Aussie dollar, which we were long on across the board, well, not across the board, but we were long. We were short pound Aussie, we were long Aussie CAD, and we were long Aussie dollar. All of those both hit their targets over the this morning. So when I seen the money on the 5 trades we took on Friday, the Swiss franc extension is sort of slipping sideways, and the pound Swiss I think is out of the money as well. But Aussie is up, or was up significantly. It's the 15-minute chart. You see the start of the day here. Last night, 2 o'clock, big old rally for the Australian dollar on the big win for the incumbent Labour Party. Again, they were expected to come under pressure from the Liberals, the Conservatives, the more right-wing party in Australia. That didn't happen. They actually collapsed quite significantly. So again, it's all in. It's fed into the incumbent party, a bit like we saw in Canada with a big surprise win for Mark Carney and the Liberals, which were expected to lose. I mean, not even a few months ago, they were a 20-odd% behind in the opinion polls, but they came back to win that as well. So the incumbent political party is held up on the back of the Trump tariffs and the reaction to it by the incumbent suppliers. So Australia stays with its Labour leader, Mr. Alvisand. So the Aussie, anyway, has continued to move up. We've hit our target 1. There's our target 1. Our stop loss is all the way down here. We'll move our target now. Our stop loss up to entry, and I might even move it up to the stop loss later on. But we can't lose on that second half of the trade. So 50% of the trade is closed. So we got in at 64, 40, 44.1. And we got out at 64.74, so 30 pips bagged this morning on that one. Do that a few times a week, and yeah, it's happy days. Keep your losing trades small, and off you go. 65 to the upside. .65 looks a step too far today. We've topped out 3-4 hours now at 64.92, so .65. Bit of a step too far potentially, unless these ISM numbers surprise quite badly, and the Aussie might tick up again. But remember, the Australian market is open today, but they're obviously all that market's closed, and Aussie-based forex traders, the banks are closed for the day as well. So anyway, 50-hour 64.77 is the next big support here today for the Aussie dollar on this 15-minute chart. Let's look at the hourly chart. You see what a strong start we had this morning. We are straight to our target, and off we go. CAD .38, 138 shape. Very much sideways action here today, pivoting just below and above the key .138 area on the dollar CAD. Not much movement there. Swissy is again on the front foot, a weaker dollar today, significantly in the this European session. So we topped this morning in Europe at 82.60, and we've been down ever since. So the low that we got to this morning has been retested again and gone lower here, and as the American session starts, gets fully underway at 82.20, and our Friday spike here at 82.05 is the next downside target. Excuse me, for the Swiss franc. Yen 143.60, down again. New session lows or new day lows as well from the the spike we moved down here on Friday at 143.75. Next big support is this trend line. I think it's the daily trend line, this blue one, and the 200 period here on the 1 hour time frame. So if we just take this up to the step up in time frame. So this is our 4 hour time frame as our actually it's probably a 4-hour trend line as well as a daily trend line, but the 50 period moving average on the 4-hour time frame is crossing where our trend line is there at 143.50 or below 143.50 at this 143.45 zone. So that's the next downside target. The 4-hour strategy. This strategy on the 4-hour time frame triggered short there this morning on the completion of the 2 o'clock candle at 6 o'clock my time. So let's have a look. If you look at the daily, we are still pretty weak. We had that push over the 220-day moving average. Sorry, on Thursday at the start of the month, and most of that now has been gobbled up and taken back. So we had a pretty weak Friday, but certainly a weaker Monday to start the new week and the new first full trading week of the new month. Key week as well. We've got the Fed on Wednesday. We've got the Bank of England on Thursday. Lots of PMI data. Most of it's to come in 2 minutes. So let's just go back to the euro and the short time frame and see what the 5-minute chart looks like. So we're sideways into the data at the moment. We've got a bit of support area through here at 113.55 or 113.54.70. Big next support really here on this 5-minute time frame. Well, remember we're bid, so any short will be against the time for it, against a high time frame 113.48. So let's just have a look how the data is coming across. We've still got a minute to go and see. Anything under 50 will be obviously the sector moving into contraction. Anything above 51 will be taken as a very positive reading. So let's see what that looks like in a minute. The other big mover, I've got a quick minute, is the move down in the oil market again. OPEC over the weekend agreed to increase output. So it's just, you can see gap down here on open. We've recovered a wee bit, so we've actually pushed to $55 low, 55.45 this morning. We've recovered to 57.50 at the moment, but let's have a look what this data is going to look like as far as the forex market is concerned. 113.50 here. We should go back to the 5-minute time frame and let's have a quick look as the data comes across. 8 seconds to go here on our forex factory internet feed. Remember, this has been a lot slower than my Reuters terminal or my or any Bloomberg terminal you may have, guys. I don't show them you go. So I just quickly refresh that as the data comes in. So it's coming better than expected. 51.6. 51.6. That's quite a significant increase. It may not seem a lot, but 51.6 hasn't actually. Does it come on there? No, 50. That's last week's, last month, I should say. It's actually better than expected. So again, the administration will like that. That's a positive tick. The dollar should tick up on that. One would expect. The stocks have opened. The cash market for stocks is open weaker, so we could see a turnaround in stocks and the dollar on that number. So 51.6, much better than expected. So 0.8 of one whole number better than last month. It's as you can see here, it's a 1.4 better than what was expected. So it's coming quite significantly better than expected. So again, you would see an improvement in the dollar, and that's immediately what we're looking at here. So we've gone straight through here on the short term. So this uptrend having been breached at its 20 period a few times and stalled here. We're below that last pivot area here. See this pivot area here, this one. 1344 area we talked about before the data came out. So we're below that. Are we going to get to the next key support, which is 113.31.7, which is the 200 period here on these 5-minute time frame? Again, as you can see, the MACD here was already short. This strategy was actually short just before the data came out. 5 minutes before the data came out, it was quite a big negative candle there. You can see that. But whether you would take that ahead of the data coming, I don't know. Remember, the other key thing today is with London close, there's quite a significant reduction in liquidity this Monday. There's been no obviously liquidity from China or Japan in the forex market today as well. Both those key markets were closed. London, arguably with many, still remains the centre of the forex business, and that's could be quite a significant impact on trading later on. But at the moment, the dollar's ticked up on that better than expected ISM number, and whether we'll see a test of this 113.32 area is yet to be seen. But we're certainly dollars moved up, and I guess we might see a tick up in indexes which were weaker earlier. Let's just use pick one. Let's pick the S&P. It's the most important. There we are. 5 minutes. You see the sort of sideways, although down for the day. Sorry, start with the hour and we'll come down. So we're sort of down for the start of the new week here, but supported by the 50-hour moving average flat there at 56.42, and we're now ticking higher on this. On this main data, the only main data of the day, to be honest, apart from anything that comes out of Washington. Obviously, they're feeding on the data over the weekend with that OPEC cut, the Berkshire Hathaway story, the OPEC news, the tariffs on foreign films, and the fact that Trump apparently also said this morning, I haven't actually seen it myself, I'm just re-reporting what they've said on Bloomberg, that President Trump is not expected to speak with President Xi Jinping this week. There was chatter over the weekend that might take place. That's not actually happening. I knew there was another bit of news I'd forgotten, which made me smile as well. He announced he's opening Alcatraz, the notorious island prison in the Bay in San Francisco. If you've ever been to San Francisco, Alcatraz, you see Alcatraz out in the Bay there, and that's a federal prison, a government prison, and notorious for, I think, what's it was there, wasn't the guy with the fedora? What's he called? Al Capone was in prison there. But yeah, President Trump, I don't know why it's making me smile. It just has announced also at the weekend he's reopening Alcatraz for all those naughty prisoners and all those federal miscreants are going there. So a felon announcing the opening of a prison. But there we go. Looks like the stock market has given up its initial gains. There we are. It's ran into its 200 period moving average and then sort of decided to move a bit lower on that PMI data. But yeah, very, very difficult one to trade that on that short-term time frame. That's very much a sideways action. Although, and I think the trend, yeah, it's flat today. So again, directionless. Certainly, I wouldn't be risking any of my cash on that market. It's biased to the upside. That's all I'd say here from the beginning of the month. Really, is that 30th of April. Can you see down that 1 hour time frame? So the highs got higher. We went to 5,700 here at the last week, but we've cooled from there. But we've still held this 50-hour moving average. So certainly some buys down here again today, but nothing really moving that up to the upside, although it's biased so to the upside. Earnings week, it's not earnings season, it's not over, but the major players of all obviously big tech week last week was a major week last week. It was a major day on Thursday. That was the heaviest day of the earnings season last Thursday when we had Apple and Amazon as well. So we got the big retailers to come. Walmart, for me, and Walt Disney traditionally signal the end of the earnings season. So they come next week, I think, Walmart and Walt Disney. But I think we got Netflix this week. I can't actually quite remember the other big. It's not Netflix, is it? AMD, I think, of this week. I did get a message about that earlier on today, so just excuse me. I can't find it. Can't find it there. But anyway, so stocks up, but giving it back by the looks of things on the PMI data. There we are. So yeah, we're still biased to the upside, but again, a flat moving average. So not something to get too excited about. But let's run through the majors. Crypto. Somebody was asking me about crypto over on our Discord group, and I put a little daily channel up there. It was over here on the trading strategies group. We'll come back to gold in a minute because that was another one as well. Marianne, so that's my that's what I put up on the Discord group. So have a look at that later in detail. You can see basically we got this leg down here. So this is a fib leg, and the key areas as far as crypto is concerned is this channel here, the 92 to 96,000, also coinciding with the key 61.8 Fibonacci level and the 50, the 0.5 fib level as well. 0.5 sits at 92, 0.618. The key golden ratio sits at 96. We breached 96 last week. We couldn't hold it, and we were down over the weekend. We're down again today. We were trading at 94, 100, I think, or 200 when I took this screenshot earlier. You can see we still bid here on the MACD and the signal line, but we've got a suggestion of a cross. We've got a rejection of the overbought area, and we moved down in this 3-day down leg. So if we actually go to the what was that? I'm going to go to the back to the live chart here on crypto. I forgot to start with the daily, which is what we are. So there, we're into our 3rd day down. So we topped out having breached the key 96,000 there at the beginning of the month on the 1st on Thursday. We went higher again Friday. Down Saturday. We were down again yesterday as we came back into under 96, and we down more significantly today. But as you can see now, as I wrote on that note to Mariana, sorry, Mariana, sorry, excuse me. Where we are now, this 94,000 is 94,400, 94,200 is a key sort of pivot area from the spring. So you can see here, we go back to the beginning of the year. It was a support area here in January, became a support area here during February. Then but this was part of the leg down, wasn't it? So this is a support area as we moved first leg down, consolidated, and then went down. Spiky retraces, always hate those spiky things. But then we went low, tested this 75,000, rallied to this next what is now a fib area here at the 88,000 level. And then bounced off that and tested the low again. So we had this double low, the Trump announcement, this crypto strategy reverse here at the end of February, and again here at the middle of April. And then we've rallied from there, from this consolidation at the beginning to the end of April, and had a strong final week of April with these 3 white soldiers here from candle formation back over the 92,000 area. Next upside target was 96, which he hit a day or so later. We spiked through it here to start the new month, but came back and come back here. So this key area is now back in play, 94,200. Are we going to hold it? Or are we going to go back to test the 92,000 level? So this, for me, remains bid on the technical side of things. We got a mix up in the moving averages. We've got the 50 below the 200, below the 20. So we'd like to see the 50 move back above the 200 for this to be nicely aligned to move us back up. We need to break away from this 96,000 level and post new end of day highs there at over 97,000 to test 100,000 to the upside again, and then the all-time high again at 109,000. If we're going to break down, we need to break through and out of this channel where this bottom is formed by the 50 fib and the big round number at 92,000, and the 20-day moving average also happens to be coalescing there as well. So we've got a triple support level at 92,000. So if this goes into this area this week, we might see some buys at 92,000 again. If not, we'll break it, test the 200, but that's less in play because of the out of alignment, and then perhaps down to the next fib level, which sits at this 87, under 88,000 again, which is where the 50-day comes up to support it. So still bid, but this is just a bit of a move down. Remember, it was over the weekend. This is quite a relatively large candle currently today. See what it looks like at the end of the day. But Bitcoin remains bid. We're short today, or you should be short today, because we're short over the weekend. The hourly chart, there we are, this peak here on the 2nd, and we've been down. It's been under its 20-hour moving average since the close of business there, or close of business there on Friday. So Friday, weekend lower, and then the opening salvo yesterday, this morning I should say, was down and then down again, and so we've tested so far today 93,360. Interestingly, on the hourly candle, 92,950, so under 93,000. We did have a go at on the 28th of April, and here on the, where was this? This was the 30th of April, so that's the next downside short-term target to the short for the short for Bitcoin today. Or over the weekend and today. So a break to take us back higher would need to break the 94,585 area. You can see that there on that 20-hour moving average, which is providing a nice area for your stop loss. Rally up to it, yeah, down again. So Bitcoin remains short on a short-term basis, last 3 days, but overall the daily time frame still remains bid or positive. We'd need to break under that 92, as I said earlier, for Bitcoin. So I hope that's explained that in a bit more detail. Diana and Mariana and others that were asking me about Bitcoin. Hope that makes my analogy makes sense. The other one, Mariana was asking about. Sorry, Marianne, was gold. We'll come to gold now. Gold's had a really good day, but it's been quite weak recently there. So again, on the daily time frame, you see how the last leg is probably is over. You know, I'm saying the last leg up. So where's our fib levels? Well, there's our 50 fib level, and it's coincides again really zone wise with the 20-day moving average, which we've run into, and it's provided support the last 3 days. So here on Thursday, as we started the new month, we went into this 21-day EMA. We couldn't decide what to do on Friday. We had a blah day, but we've had a strong day today. And look how the positive green candle today is engulfed Friday's action and Thursdays and Wednesdays negative action at the moment. So it's a positive rally today. We are back over the 3,300 level. Next upside targets, as I've marked here on the lower time frames, are these two purple lines here, which take us to 3,000 and 3,328 to be sort of pedantic, but 3,330 with a nice round number. And then the other one is here at 3,349, but call it 3,350 for the sake of $1. And again, you see what a resistance area that is. So 3,350 to the upside here on the daily time frame, and also on the lower time frames as we going up. If we come down the time frames, 4 hour, the big move this morning as we went over the 20-day and the 20 and 50 period moving averages and broke the key 3,000 level. So it was a very strong start to the European session for the gold market today on this 4 hour trend, having been, as I say earlier on Thursday, down in to test the 3,200 level. We were just shy of that late on Thursday morning. But looked like we couldn't break the 20-hour moving average into close on Friday night, but certainly a very strong start to Monday for gold here on the 4 hour target. So we've actually hit that intraday target I'd give to Mariana before earlier on today. That first target there, that's 33.28 zone, I think it was, wasn't it? Yeah, 33.28. And there's that other purple line we talked about on an intraday base next to the upside at 33.50. I've got the 1 hour time frame. That's those zones we were looking at. And there's the that's where we got our potential upside target from in this last hour. So 33.28 is actually being hit. So, but then as it as last time here on the 29th of April, we've ran to it and then come back down from it. And then again here on the 30th to start the Asian session on the 30th of April towards the end of the month, it ran down from that as well. So are we going to see a similar movement to the downside? Obviously 3,300 is our support zone as we go into the rest of the trading day today, but we've had a positive start. And here the 1 hour trading strategy here using this crossing moving average would have gone long this morning on open, and it's remained long. May have added to that there with that big strong candle in the European session, but caveated that by the fact that China, Japan, and London is closed. So don't get too risky, don't go all in on that. But we have hit our initial target. We were up to Mariana earlier to the upside, and our short-term stop loss might be, well, yeah, it needs to be around about here. I'd have it here where the 200 hour moving average is at 32.93. It's below the key 3,000. The 5 and the 9 moving averages here on daily basis, hourly basis, are above 3,000 now. So that's looking quite good. The only problem here is this potential rejection of our upside target. It's happened before. So these long positions here today may already be out. And this looks potentially performing a rounding top there on the hourly time frame. If we go down the time frames again, you see that probably the 10-minute and 50-minute have already done that. There's that exceptional spike on the data, and we're consolidating on the 15-minute. If we go down again to the 5-minute, we've again much longer consolidation. There's no rollover there though, so that's quite strong. So the longer this goes on for, guys, the bigger the break from here could be. It's sort of we've got this compression of the moving average, the 20 and the blue line, the 50 hour. So we are starting to move under the 50 hour. So this is looking like it could break. So break from literally where we are now, and we could move down as quickly as we've moved up potentially in the next hour or so. But at the moment, we've rejected higher here on the data. We rejected lower 10 minutes before the data. So really that's the area, $3,310. A break under there anytime soon, and we could move down quite significantly, given that we moved up quite significantly, nicely as well, and steadily. So this may be just another test to the downside. So I'd be watching. If you look to try and short this, remember you're against the hang on, yes, you're against the daily trend, which is up at the moment. So I just put that on there. So that's the area I'd be looking at now if I was trying to trade this in the short term. A significant breach of that 3,310 level, and I'd be adding to shorts on that one. It's, we are under a key moving average as well, the 50 period moving average. We're back to it again now. So, and we've been chopping around for a while, and that's the main data out of the way. The US cash session is up and running. So yeah, I'd be waiting and seeing a break above here on these candles at 3,320. So that's my range today. If you're trading this on this 5-minute time frame, that's my analysis and interpretation. What we're seeing today in the gold chart, we're consolidating between 33.10 and 33.20. A break of that $10 range, it could be quite significant because this a consolidation has gone on for quite a long time. So, but this is probably profit taking from this big rally from this morning. You can see the consolidation this morning, obviously on lower volumes, given that London was closed, and major markets in Asia were closed as well. But we've broken out. So again, I'd be checking the volume. Interestingly, the MACD lines haven't actually crossed there. It's still short here, having got topped out there, but it hasn't moved down price wise, has it? MACD again, RSI is holding at the neutral 50 level. We're just oscillating around it there. So I'd wait for a break of that. If we don't see a break below here, looking to buy it. A break above there, add to your buys. A break below here, this 3,310, and then you could see a lot of fresh air there into the 3,300 level for gold. So there's gold on a short-term basis. I know that you ask about more short-term ideas. So that's my take on that. Guys, let me just check if there's any comments in the comment box. There's no comments. I don't know how many of you are here today. It's Monday. So that's gold. Copper and silver have followed gold high today. Silver at 32.23. That's a 5-minute following gold lower, obviously. So we were higher this morning. We turned around earlier ahead of the ISM. So we've topped out at 32. What is that? 32.60, 32.50. Yeah, 32.60, 65. Again, another high. We got to on a Friday as well. So overall, silver not as bullish as gold, and rolled over and moved to the downside. Big support next for silver is the 200 hour at $31. So holding at 32.25 at the moment. A bit of sort of flat, as you can see here, for the moving average. So big spike down, big spike up here, these sort of movement, but again, sort of biased, if anything, to the upside, but sort of consolidation could follow, even though we've had this very choppy movement for silver, so very messy chart for silver. Indexes, let's have a quick look how they've reacted to the data, see if they've held on to their move to the upside. Indeed, they have. They've ran to the so that was the data there. That was the head of the. There was a. Oh, sorry. Look at how that candle's been finalised. 3 o'clock, 5-minute candle. But upside, downside, upside, downside. So we have breached the 200 period here on the 5-minute chart for the last 10 minutes. But we're looking coming back to test it again. 56.50, big round number again. So choppy start to the new week for stocks. If we got to the daily time frame, we were up into close on Friday. Where were we? We closed Friday at 56.86. The Dow was up 1.39%. The S&P was up 1.47%, and the best performing of all was the Nasdaq, up 1.51% on Friday. So we'd had this big old 9-day rally in the S&P 500. Bit of a glitch there to start the new month, but strong follow through on Friday over the 50-day moving average, over this key fib level of 61.8, and we're sort of cooling a wee bit today, understandably, as we test the 5700 area. So although we're down on the day, the bid to the upside remains for stocks. To be honest, here technically we're over the 20-day moving average. 20-day moving average, as I said last week, is now into this key 5,500 level. It also coincides equidistant between the key fib levels of this down leg, the last down leg, between the 38.2 here at 5,300, the 50 there we just said at 5,480, and the key 61.8, which we have breached on Friday's close at 56.31. So the big 80-point rise for the S&P, the 1.47% rise for the cash market on Friday has been technically and obviously psychologically positive as we've gone into the 5700 area. Obviously, you can see here a big fat flat line at 5700, and then the big flat technical line, the 200 period moving average at 5770 to the upside for the S&P 500. The Dow a little different, Nasdaq very similar, but closer to its 200 day moving average at 2254. The Nasdaq 100 strong day, I'd say 1.51% on Friday, again closing through a psychological level, this time being the 20,000 level, and a strong bounce for the Nasdaq. A break of the 200 could be key. However, it could also form a double top. As we've had this death cross, obviously the immediate reaction of the death cross is a bounce higher, typically because it's all lagging, but ultimately we may end up back down here. But at the moment, expectations are that the tariffs are perhaps not going to be as bad as still on the cards. All the negativity about tariffs may be out there. Chatter of deals getting done in the next few weeks, if not months. India, Japan, South Korea are all at the top of that list. UK swirling around there, but typically caveat of that is obviously trade negotiation can be very, very long and very, very extended. It's not the sort of thing that Mr. Trump likes to hear, long and extended. But again, see what all happens. He's got Alcatraz open now, so I'm sure he's happy on that. And the Dow 41,265 at the moment, into its 50-day moving average. Not as buoyant. Remember, it's only 30 stocks in here. Industrial stocks, they've been obviously very much goods related, much more focused on the tariffs, the Dow, but it is holding the 20-day moving average. We ran another strong day on Friday into the 50-day moving average. Like to see a nice break of that. Again, equidistant between this last leg down between the key fib levels, the 50 here at 48.40 and the 61.8 at 41,800. So still bid, still nicely supported. This uptrend down leg down trend line all the way down there now. 39,670 is a trend line. So lifted through the 20-day moving average. So next upside target, the 61 fib there at 41,800, as I just said, and the 200 sits at 42,400 for the Dow. Nice slope here on the RSI, nice slope here on the MACD signal line on the MACD, and positive histogram on the MACD as well. So all looking pretty good. Okay there. Let's see if we can break this 50-day moving average resistance for the Dow, excuse me. So where are we? It's 3:30 here in London, 2:30 Universal Standard Time. I'm going to wrap this up. It's Monday. I think I've been through everything. Is there anything I've missed? Anybody? Give me a shout. Let's go back to the euro. So in summary, we have a weaker dollar today. It's let's come back here. Weaker dollar today. So euro was flattened on Friday. We've again another one that's found support around the 20-day moving average, which sits at where's that? Is that now? Where's that line there? 1262. 1262. Yeah, that's our support area. So again, let me just go back to the 5 minutes. How it's reacted to the data. So it was dollar positive there as the data came out at 3 o'clock, and we continue to decline. So we've got a weaker dollar today, but it's come back on the main data today, so that's relatively good news. We haven't gone to test the, or we did go into the test the 200 period zone here at 1333 again, and we are sort of a bit, we've ticked lower since, haven't we? So we've sort of drifted lower. So this is biased now here on this 5 minute time frame, short, which I said as it was literally 5 minutes before the data came out. So whether you were brave enough to take that short on that strategy there, who knows, with your target perhaps down there if you're going for it. But you know, as the day transpires, perhaps we will drift further down there as we are, you know, it's quite a good breach of the 50, and the 20 looks like it's about to cross the 50 as well negatively. So equally though, of course, we could find support through here as we did here earlier today. It was a resistance area as we were coming up here this morning, and it was a high area that was a resistance area also here from this early trades this morning at 6:30, and again here on Friday. Oh, and in fact, this was still today. It's the 5th early, so it's a resistance off it, into it, off it, through it, back to it as support, back to it as support now potentially. So we could look to buy that, in fact, and the shakeout might have already occurred. So again, we could be testing the upside, but at the moment it's short, it's under the 50 and the 20. A breach back up here could take us back to test the upside. All-time high today was at 1365. We rejected that. More consolidation was through here, wasn't it? At 1360 or 1358, shy of 1360 or 1358, and then you can see those levels we talked about earlier, 1356, and then this key 1345 to the downside. So still remained biased euro to the short side following the data, but overall we got big support at the 200-hour moving average at 1333, and but resistance at the 200-hour at 1350, which is basically what we've seen today. So positive day and cooling a wee bit now. Shorter time frames, the 5-minute traders still short on that one, but the higher time frame traders biased to the upside. So we've got this flipped, but the higher time frame remains positive, and there's that 200-day moving average all the way down there at 1260, which we moved into last week, and we bounced off on Friday, and we've moved up from significantly so far today. Okay, so I hope you're well. Join me tomorrow. It's a late one tomorrow. There's not much data tomorrow, so I've decided to do another webinar on trading the open, and I don't know why I've done it at 6 o'clock my time, which is 5 o'clock UTC. We should have scheduled it for the US Open, but we'll do it again when for the live markets, when the live markets are opening, either European Open or the US Open, 2:30 or 8:30, 8 o'clock my time. But tomorrow it's just the mechanics of trading the opening bell. with me. For the rest of the week, it's a key week, my friends. If we just roll forward, as I say, China, South Korea, China, UK all closed today. Our main data we've seen the ISM manufacturing, the ISM services number coming in better than expected, or non-manufacturing as they called it. The global PMI, S&P was also better than expected, wasn't it? Japan and South Korea still closed tomorrow. Tuesday, I say it's relatively quiet. There's no big 3 bull candle here on the investing.com. The only note is which is a key number, is the 10-year Treasury auction, but we don't offer Treasuries here. I do explain them to everybody and the significance. The yield number, that 4% on the 10-year yield, is where Scott Bessent wanted the US markets to be. Last time we had this auction, basically people buying US treasuries, investing in the US government. The interest they got was I get it, they've been given on their coupon is 4.435. Too much for Mr. Bessent. He wants it lower than that. So private inventories, the Fed, Atlanta Fed GP now, it's very, very topical, very in vogue. Measure of GDP also tomorrow. Wednesday gets a bit more data heavy. It's the 7th. We got PMI data from the UK and Germany. And obviously later in the day, we have the Fed decision. Absolutely no way they're doing anything with interest rates. Be a complete fly in the ointment if something, the pressure from government actually had something. But 4.5%. They do sit with the highest of the majors. Mr. Trump and others have a point. I don't know if it's going to come up here. There we are. You can see here now. UK the following day, Thursday, expected to cut at least 25 basis points on Thursday. So the US will be top of that pile at 4.5% on Wednesday. It'll be interesting to see how Mr. Powell sort of navigates the press conference and how the statement words itself and what reaction it gets from Washington. What did he call him over the weekend? He also said he's not. Trump also said about not looking to sack Powell again over the weekend, but what did he call him? He's quite rude again about Powell. I can't remember the word he used. I haven't made note of it, but anyway, as is his wont. Thursday, I say, is really UK dates, London dates, Bank of England, very active members of the MPC in London. See what they've got to say and how they're voting. 25 basis points cut again. Many are saying it's a bit too late, but let's see what Mr. Bailey and his crew have got to say later on after that as well. We've got, obviously, it's Thursday, so it's weekly claims out of the US, remarkably resilient. 232,000 coming down again. So this looks like an outlier of the 240,000, but we'll see ahead of that non-farm payroll last week as well. But see what that looks like. Bailey's press conference also later on, the 30-year auction as well, the longer-term auctions on Wednesday. On Thursday, and Friday is Canadian jobs. We got plenty of central bank speak. Mr. Williams, who's vice chair of the FOMC, head of New York, Key Barr, who's been promoted to the vice chair for supervision, and Mr. Pill, the chief economist of the Bank of England, also got something to say Friday morning. So plenty to get your teeth into as far as Fed speak and central bank speak on Friday. Waller and Williams also speaking again later on Friday, as well as the Canadian Canadian jobs, wasn't it? Canadian jobs data, a week out of sync with the end non-farm payroll on Friday as well. The other thing on Friday, 2:30 my time, 1:30 UTC will be my next webinar with TTP with regard to trading psychology. So do join me on that on Friday. If you're not with us, why not? We're one of the best, if not the best, prop trade companies out there. The proptrade.com. Do come and join us. We're grown-ups around the room, in the business. Our challenges are as competitively priced as anybody's. We got a May madness, as we've called it. So check our social media out on that. There's discounts on our standard phases, but our coupon, or the coupon here is still working. SC25, I think, still works. Gives you a apply. There we are. There we are. So depending on the account you want to take, it's $20 there for a $10,000 account, 50,000, lots and lots of equity to play with there. Get you an $86 discount to just over $250. Come and join us. You got nothing to lose other than a few $100s if you blow it, but you got everything to gain because you can make some real money once you've proved yourself a successful trader. So if you haven't got 25,000 two-step challenge is the most popular with us. I know some of us, people are in a rush. They like the express challenge, just a one-step move. 25,000 one phase challenge would come in at $130. The target's a wee bit high. The profit target 12%, daily loss 4%, overall loss 7%. So it's a bit tighter, but you've only got that one step before you get to potential 80-20 split in any profits, any real dollars you make. We pay you every Friday, 5 days after you made your the profit in your funded account. So do come and join us. You've got nothing to lose, and we're here to help you try. So stick your questions on our Discord group, and we're here to help. Okay, so take care. I'll see you again tomorrow for the Trading the Open webinar. Lots going on this week. I'll be there for the FOMC and the Bank of England on Wednesday and Thursday, respectively. And then Friday, we got this trading psychology webinar, which I'm really looking forward to. It's one of my big mantras, one of my big hobby horses. So take care, everyone. I'll see you all tomorrow, and trade carefully. All the best, everyone. Bye-bye.